Well, here we are in 2025. We have a new president in the Oval Office in the United States of America, and a lot of changes going on. Typically, in the quarterly review video, I kind of talk about, some of the funds, economic issues, and so forth. But there's been a lot of discussion lately around the new change that we have, and I thought doing a different video might be more. You know, on point to what is going on in the world right now. So I wanted to share some perspective on the presidential inauguration and what it means for your investments and financial planning. I hope this helps you understand some of the main points we are considering. We're here to support you with any questions you have about political change. And as financial planners and respecting people's political views, I want the short answer to be that the majority of the people should stay the course with their financial plans. The economy and the investment and markets have both done well, regardless of which party controls Washington. So the pursuit of financial progress remains broadly unaffected. That said, the new administration does bring some policy change. And as the president has already signed many executive orders on inauguration day and the following days, I'm going to go through a summary that could have some impact on some aspects of our financial planning in the coming years. So the first thing I'm going to do is I am going to change a little bit, is I'm going to share my screen with you, as I always do, but I'm only going to show you two slides. So I'm going to show you two slides, and hopefully you'll just enjoy them. So again, I love showing slides. I think data points are fun and people like to look at pretty things. I'm going to do the two slides and then move back and just kind of talk about some different things. And you have to stare at my face for a while. The U.S. economy and presidency. So I think this is a great chart, and I got this from our friends over at Clearnomics. It shows that the economy has grown steadily since World War II across both major political parties. It seems unintuitive, and to many investors, how much each party is portrayed when it comes to economic policy. The reason for this pattern is that business cycles are impacted by many factors beyond the party in the White House. So again, whether or not it's red or blue, we've seen increase in growth. And again, if you see all these little gray lines, those are recessions. Obviously, the most recent one we had was the pandemic. And then we all remember the financial crisis of 08, 09, the dot-com bubble, the banking crisis that we went through under Reagan, just on and on. We always have these things that happen. It's just, as you can see, the ship keeps moving up and to the right. And then their second one, and I think this is probably the one that I talk about the most in this office. Again, I got this from Clearnomics, is individual and corporate tax rates. Individual and corporate tax rates are quite low by historical standards after the 2017 Tax Cuts and Jobs Act. And that occurred out here on the chart. Now, some of you are expected to rise in the future due to the size of the deficit and the budget that we have going on. So these are things that we really need to keep in the back of our mind, is not that what we are today, what it was in 2017, what it is today, and what the changes are. So historically, the top rates have been much higher, especially during wartime. And obviously, we've had a very long period of peace, barring the war on terrorism, things like World War II, Vietnam, and so forth. So those are the only two slides that I do want to share with you. I have some very strong notes that I'd like to mostly read to you, but I think it's important that I do make sure that they're very clear. So the one thing that has changed with the new incoming president is tax policy remains supportive. Its relatively low tax rates are likely to be maintained for individuals and businesses, and contribution limits to retirement accounts are expected to continue. Specifically, the Cuts and Jobs Act will likely be extended. Keeping taxes at a similar rate today, while this is positive news for many, it is prudent to prepare for a potential future change, especially with the national debt continuing to grow. So that's some good news for today. But again, think about the future. Federal budget requires care. The government continues to spend more than it receives in taxes, resulting in a large deficit. Neither party has made serious efforts to rein in the deficit in recent years, leading to a national debt that now exceeds an astonishing $36 trillion. A new Department of Government Efficiency, otherwise known as DOGE, has been established to identify potential spending reductions, although it's unclear how much it will help. Planning for a possible changes to future tax rates is only to grow to be more important. The international trade could affect the economy. Trade policy changes may affect the economy, particularly regarding tariffs and international relationships. In fact, today, this morning, with Colombia changing their mind or changing their tune on accepting their illegal immigrants back into their country at minutes after Trump announced a tariff. So, as of November of 2024, that's the latest data I have, the U.S. imported 78 billion more than it exported. Although this is not necessarily a bad thing, as it reflects strong domestic consumer demand and economic strength, the purpose of tariffs is to protect domestic industries, but some worry it could spur inflation as well. This could be overseen by a new external revenue service. Energy prices affect our consumers. The U.S. remains a global leader in energy production and will be a continued force of the new administration, especially with the new National Energy Council. For markets, greater energy output supply could be more stable prices, especially as geopolitical conflicts continue to rage around the world. Energy prices are also a primary driver of overall inflation, and gasoline prices can affect household savings rate. On a separate sidebar, I want to note that energy is going to be a very strong look for us because of things like AI. AI takes about 4 times as much energy to create and continue to work. And who knows, we may be at an inflection point in our history where we saw the World Wide Web. Now we have this new AI. And if it takes so much energy, that could become a very big issue as well in the future over the next decade. Maybe not something to look at today, but over the next decade could be very impactful. Labor markets dynamics will likely shift. While the new is focused on illegal immigration and border security, a change in immigration policy could impact legal, skilled, educated workers as well. Currently, job openings exceed workers by 1.2 million positions, which is a sign of a healthy workforce and economy. That said, maintaining a safety net to protect against a job loss or change remains a worthwhile consideration. So we face a complex environment in 2025 with steady economic growth balanced against fewer Fed rate cuts and higher valuations. Following Donald Trump's election in victory in November, we also saw a rise in investor sentiment. Although this has since softened, while good policies do matter and can drive productivity growth, there are many underlying factors that impact investors. Markets never move in straight lines. Is the market going to go up or is the market going to go down? I always say yes. So a balanced, diversified approach remains critical for long-term success. And I think here it is the point. The bottom line, policy changes deserve attention, but they shouldn't override your long-term financial plan or investment strategy. Markets have shown remarkable resilience through many political cycles, and maintaining a balanced, diversified portfolio remains the best approach for achieving your financial goals. That's my summary. I appreciate all of our clients. We love to come to work every day and get to do what we do for a living to provide for our families. And hopefully we're doing that and providing you value on a daily basis as well. I'm going to send this video along with some additional things at the bottom. Down there are just 3 common questions that I've been getting about the election that I just like to respond en masse to all of our clients. Appreciate you all. Hope you have a wonderful day. Be well.